Hey guys, welcome to the Smart Venture Podcast. In each episode, we're going to have conversations with some of the top investors, superstar founders, as well as well-known tech company executives in Silicon Valley. We'll have a coffee chat with them to learn their way of thinking and actionable tips on how they build or invest in a successful company. Before we start our show today, I want to make sure the listener, aka you, understand that everything a person say on the podcast only reflects hers or his own opinion, not the show or the company they work at. Our guest today is the founder and CEO of Clearco. Clearco is a suite of performance financing products and services to help founders grow their companies. They use data to forecast companies' growth, create tailored financing solutions, and provide non-dilutive capital to founders who need it. Clearco has invested more than $2 billion into over 5,000 companies. The company has raised $520 million to date. His name is Andrew D Souza. Welcome to the show, Andrew.
Thank you. Great to be here.
Andrew, you were born in India, moved to Canada, lived in Chicago for a bit, went back to Waterloo for school. You've worked at GM, McKinsey, and some startups in Silicon Valley. Now you're the CEO of your own company. It's such an interesting journey with a global perspective. Tell us more about how did your past experience influence your career now?
Yeah, I think, certainly sort of being born as an immigrant and growing up in different areas, I saw my parents have to sort of learn to adapt into new environments. And, I think also growing up without like a lot of resources, I had to figure out a way. If I wanted to go to the movies with my friends, I had to get a job and make enough money to do that. Right. So from when I was pretty young, I just figured out how to do odd jobs, mow the lawn, walk dogs, tutor kids, deliver papers, whatever I needed to from probably about 10 years old. I just sort of realized that finding a thing that needed to be done and figuring out how to build those skills and do it was not that hard and was sort of a way to get what you needed to in the world. And then, I think having a global background really helped, especially, throughout my career and later in my career, with the understanding that talent and ambition and work ethic is kind of universal and pretty evenly distributed around the world, but access to opportunity may not be. And so a big part of, my mission and, what we've done at Clearco, but even, outside of that has been unleashing sort of opportunity to people who may have all of the right ingredients, but may not have the right opportunity to go after it.
Yeah, for sure. Speaking of having the right network to raise funding, you're great at surrounding yourself with ambitious people. You met Chamath because he was a Waterloo alum. Your partner, Michelle, is an amazing entrepreneur herself. Seems like you are great at cultivating an ambitious network. Curious, who is on your personal board of advisors when it comes to making career decisions?
Yeah, I think I've been really lucky and been fortunate to be exposed to some amazing people and really inspirational people and to be able to develop really close relationships with them. And, I don't know if it was anything I did proactively where I was like, okay, I'm going to go get to know these people. I didn't know who Chamath was. He was head of growth at Facebook and I was looking for a job and I'd done some work with Engineers Without Borders and the founder of Engineers Without Borders was in first year residence with Chamath and they were friends from university days. And so he connected me with him. My resume landed on his desk and he had reached out to me and said, look, you can either join my team at Facebook or you can join a company that I'm on the board of called Top Prospect. And that was sort of what brought me to Silicon Valley in the first place. But, I would say that what I really would try and do is, every time I'd meet somebody interesting, I would try and help. So I was not afraid to ask for help when I needed it. But probably more importantly, I sort of tried to understand what they were looking for. And most investors are looking for interesting companies to invest in. Most entrepreneurs are always looking for, at one point they were looking for investors. Now, increasingly, they're looking for great talent. And so every time I had the opportunity to be a make a valuable connection, I would try and do that. And that ended up, putting me in an interesting position where for a little while I was kind of a conduit between Canadian, emerging tech and Silicon Valley investors, and that was actually how I ended up meeting Michelle as well, when she was raising money for her company. Somebody had put us in touch to help her on that journey.
Totally. What's your approach to stay in touch with very successful people? You mentioned you would try to provide value by introduce entrepreneurs to talents to help them raise capital. Would you actively follow up, or more like if someone need help, you would help them? I used to work in VC. I feel like sometimes people reach out to me for introductions. I want to help them, but since I'm no expert in their industry, I don't feel comfortable about introducing something I don't understand completely to people I know. Say if a founder asks me to introduce them to you, if the deal sucks, it may impact our relationship as well. How should I try my best to help, but be mindful about other people's time?
Yeah, I think it's, you have to, it has to be people that you can vouch for, right? I think when you make an introduction, you're putting yourself on the line there. That's representation of you. And so, yeah, I think it's very important to be able to sort of stand behind those recommendations and introductions. Otherwise, it affects your own reputation and relationships. I think one thing is just, everybody's busy. Everybody's happy to help if you can make it easy for them, right? So I think sometimes it's like, oh, I'd love to just catch up, or I'd love your advice on something, and those are the types of things that are really hard because it's been hard to schedule. So one of the things I've started to do is just like send people voice notes and be like, hey, I could use your help on this. Do you know anybody? And you can sort of have an asynchronous meeting. Or when people ask me, they're like, hey, I'd love 20 minutes of your time. I'm like, why don't you send me a message, send me a voice note, I'll respond. And I can do that. And I can do all of those on like a Saturday morning, instead of it being, blocks of time in my calendar that are hard to find. So, I think it's just making it really easy for people to help you. Right. Is probably, especially in today's world, one of the best ways of going about things.
Yeah, absolutely. What I thought was really interesting about your background is you did engineering, you've worked at GM and McKinsey. At the startups, you've worked in BD, sales and marketing. Now you're the CEO. Along this journey, what do you think is one skill that everyone should be learning? It could be soft skill like sales or technical skill like coding.
I'd say one of the most universal skills that I'm still working on, but I think is helpful for everybody in every sort of dimension of life, is just being able to, I wouldn't say control your emotions, but understand them, and use them, for good. I think a lot of times our own emotional reactions to things, whether it's criticism of our work, whether it's, something, can undermine our ability to grow and perform well. And so I think this is one of the most effective, skills is being able to understand when something is making you uncomfortable, angry, anxious, nervous, happy, excited, being able to sort of identify that and then go a little deeper and understand why, right? And actually, so fully feel the emotion, but then really sort of get to a point of like, well, why does this make me anxious? And what is really making me nervous about this whole thing? And, I think that's one of those skills that is incredibly valuable for anybody in any role, whether it's a, engineering and technical role, or a sales driven role, or a general management role, or an investing role. I think, we're very, very controlled by our emotions and our hormones and things. And if we can start to get a little bit more, in tune with those and in control of those, I think, we can be much more successful. We can take feedback much better. We can grow much faster.
Absolutely. Wow. I wasn't expecting this. It is a skill that you have to practice, right? Like it's like an emotional control skill, I guess. I was quite surprised. Curious, because you have been through so many different positions, what did you recognize was your superpower?
Yeah. I think this is one of the things I would also say as I went through my career, I started to find the dimensions of my job that I enjoyed versus the things that I didn't think, that I thought were kind of draining for me. And one of the things that I find I really like is like, kind of making these sort of non-obvious connections and whether it's hiring somebody for a role that doesn't really exist, but I see something in them that I like, I put them or moving people around, or making an introduction to somebody, or structuring a partnership that is, not obvious. Those are the things. I always look at it as like a jigsaw puzzle. And I love sort of finding these creative ways of structuring teams or roles or partner or deals in a way that gets everybody what they want. And I find I get a lot of satisfaction when those things just click. So that's probably the area that I've really gravitated to, and increasingly I find I do that in my team, is sort of structuring the organization, putting people in the best roles for them to succeed, to take advantage of their skills. And that's been what I've gravitated to as the company's getting more and more complex.
Yeah, that's real interesting. So your superpower is connecting the dots. Speaking of connecting the dots, when you started Clearco, how did you figure out Shopify owners are the core customer you will be serving? The problem you're trying to solve is pretty obvious. There's no founder would say they're passionate about fundraising. You guys try to create the product for Uber drivers, then Airbnb hosts. Now you guys landed on Shopify owners. Can you walk us through how you came to this conclusion? Also, on your team, you guys have data scientists and have salespeople. How do you come up with the team dynamic? How did you guys land here?
Yeah, I would say, the mission hasn't really changed, right? We spent a lot of time thinking about, there's a new economy, whether it's the gig economy or sharing economy or online sort of e-commerce. The economy shifting, and access to opportunity, financial services, capital opportunity overall was not going to be, for the first time could be evenly distributed. So if you think about, for all of history, it's sort of been, you had to be in proximity to the people with the money, and the people with the money got to decide what get done, right? And it was sort of like which roads got built, which castles got built, which, research projects get funded, which companies get started. And I think for the first time, given the use of technology, we can actually shift that balance of power, and there's no longer this sort of scarcity, and there's no longer this sort of proximity that's required. You don't have to have a personal relationship with somebody in order for them to invest in you. And so that was sort of the mission, was this idea of like, can we unleash opportunity much more globally for different types of businesses and different types of entrepreneurs that are trying to achieve their dreams? And can we take much more of an abundance approach than a scarcity approach? And like, again, for all of history, it's sort of been like, okay, well, there's only so many VCs and they only have such big funds and they only have so many, board seats they can sit on. And so it's just the best of the best of the best. And, it's a selection process and this competition for founders to get there. And I think we can now, there's more than enough capital, and there's more than enough advice, and we can actually program, we can actually use technology to scale the advice that you give founders. And so you can really take an abundance approach to company building and entrepreneurship. And I think the world looks much different if you can do that. And it's pretty exciting.
Yeah, I feel like it's really cool that you guys came up with the mission. When it comes to pitching investors to get funding for Clearco, how did the pitch go? Since the company is almost against traditional VC mechanism, what do you say in your pitch?
Yeah, so there's two different sides of the business. So there's the equity side, which is where we raise money to build our products and invest in our own R&D. And interestingly, I think the really good venture capitalists realize that venture capital is a great product for funding technical risk, right? Funding R&D, funding things with a lot of uncertainty, and could be a very long time horizon, could be a lot of volatility, but really product development and R&D is a great place, and that's where venture capitalists want to spend their time. But there's many companies that don't have a lot of technical risk, right? They found their product, they know that the customers love their product. Now it's just about investing in growth and sort of winning in the market. And so in those cases, equity and venture capital is very expensive. And I think most VCs understand that, because they get pitched lots of these companies that don't need venture capital to de-risk the technical risk side of their business. And so the VCs that backed us, I think, understood that, and they appreciated this opportunity to bring the benefits that they bring to the 1% of the 1% of the 1% to millions of founders and entrepreneurs around the world. On the other side of the business, we have fixed income investors, and those are people that are They invest in debt, they invest in fixed income products. And it took a while. We probably heard no from 200, 300 people on Wall Street.
Wow.
They were like, you can't, there's no way you can make money, without taking a personal guarantee or without taking a lien on assets or without taking equity in these companies. They're too risky, right? Because online businesses, e-commerce businesses are high risk businesses and they're asset light. And so, it took a while for them to recognize that you could use data to mitigate that risk. But we eventually found a few groups of people who were believers and had backed us. And now, the numbers speak for themselves, and we've been able to make the model work well at scale.
Yeah, I think that's just takes a lot of dedication in your previous startup experience and now at Clearco. Seems like you're great at raising capital. What's your advice for first-time founders when it comes to raising? Do you go through all your connections, putting everyone on an Excel sheet, categorize them, and putting funds into different tiers based on relevancy to your industry? Do you intentionally start networking ahead of time? How do you go about raising in general?
Yeah, I think the first step is to have a real plan on uses of funds, and like here's the part of our business that we've de-risked. Here's the part of the business that still needs capital to de-risk, and here's why we're going to use your capital to get the most leverage. And I think that's one of the things that a lot of founders just don't think about, sort of the uses of funds, uses of proceeds, and what type of capital they need in order to meet those uses of proceeds. And then, it is a lot of VCs want to be pitched. So it's a lot of sort of building that list, identifying who's going to be most likely. You don't want to waste your time with VCs that are different stage, different industry, don't believe in your thesis. And so, one of the things that we did was we had a lot of relationships that we maintained, but it wasn't hard for us to start the process. But once we're pitching, it's a very okay, we're now raising. And so it's this kind of a 6-week process. In a pre-COVID world, we basically would get on a plane and we'd go from Toronto to Silicon Valley to, New York to Boston and then back. And we just did that route twice and met everybody that we needed to. And we ran a pretty efficient process, and we sort of stuck to our timeline. I think that's really important because I think a lot of investors will just wait. The more time your business is in business, it's sort of de-risked. And so an investor will wait to the last possible second before they decide to invest. And so if you give them months and months to just, if you're fundraising, but you're not actually forcing a timeline, then they have no incentive to accelerate your timeline. And so that's where, forcing the issue a little bit and setting an, explicit timeline is can be really to the entrepreneur's advantage.
For sure. When it comes to picking investors, besides researching on Crunchbase, PitchBook, and friends how would you plan the pitch for 200 to 300 investors? I'm sure you didn't pitch them in one day. How would you evaluate who would be a good candidate to pitch first? If you're pitching to investors who only invest in your space, I'm sure they would hear pitch from your competitors or even invest in your competitors in the end. How do you navigate this kind of situation?
Yeah, the unfortunate thing is most investors, will only take a meeting if you have a warm intro, right? And it's logical, it's rational because they have thousands and thousands of people who want to pitch them every day. They only have so much time, and they trust their network to basically be that filter. And so most investors require you to have a warm introduction, somebody who they trust, who knows you, that can put you in front of them. Honestly, that's part of the reason why we started Clearco, was one, to eliminate that, but also we do have, we've got a few hundred companies in the portfolio who have raised venture capital, and we are now building we're using our own network and our own sort of scale to help those companies when they're ready. And so they may come to us for non-dilutive financing, but then when they do need equity, we can help prepare them, put them in front of the right investors, and get them those warm introductions that they, might otherwise struggle to get if they're not in, one of the big cities that or went to the right school or whatever.
Yeah, I thought that was really interesting. You guys invested more than $2 billion, 8 times more female founders than traditional VCs. You invested in 50 states in the US. Why do you think the traditional VCs doesn't do these kind of investments? And how do you leverage data to statistically justifying those investments?
Yeah, I think there's probably two reasons. One is, as you mentioned, it's just hard to get, people's networks look like them and sound like them. And, so I think it's just if the primary filter for venture capital and access to capital is your personal network, then naturally it's going to shut out, people that are from different parts of the country or different parts of the world, or, have different interests and life experience than you. That's just a factor of sort of how human networks evolve. I think the other dimension is because it's ultimately a human being making a judgment decision on whether they think that you're going to be a good founder with a good product, in a good market. It's typically the investor needs to resonate with the problem that you're solving, right? So Peloton, for example, did very well because people are like, well, yeah, of course, people will pay thousands of dollars for a bike and then a subscription and all this stuff. You start to see consumer products that tailor, that cater to a specific demographic, attract a lot of venture capital. You think about a product, we've got products for autistic children or people with a very specific skin condition, and if you meet an investor that doesn't experience that problem, they're never going to have the same enthusiasm and conviction around investing in your business as somebody who does. And so one of the things that we do with our model is we don't require, it doesn't require somebody's judgment call to say, I want to invest in this company. If you have the data and you know how to find customers that want your product in an efficient way, we will invest in you. And it's again, because we take this sort of abundance approach to investing. So we don't need, we don't only have 100 spots in our portfolio. We'd like to fund 1 million businesses. And so I think that's where we can do things a little bit differently.
Yeah, for sure. When I think about Shopify business, it's more leaning towards consumer products. It's likely many of your investment will make the money back, but it's probably not going to encounter super high multiples on the investment. If the company fail, how do you make sure your entire portfolio stay profitable? What are some factors you use in your algorithm that helps you figure out which company to invest in?
Yeah, so this is one of the nice things. We don't need the companies to 10x every year, right? We don't need a company that's going to grow and be $1 billion IPO. We do need the companies to be successful, and we think we can help. And I think this is one of the areas that, not only do we use data to identify companies that are already on the path to be successful, we're increasingly using our data to help these companies make better decisions on how to allocate capital, where to invest when, how to plan their business, who to work with. We launched a product called Clear Angel earlier this year, which is, we looked at our data. We'd funded 5,000 companies, but we'd said no to 50,000. And we realized that it was because they were too early, or they just didn't have the data points for our algorithms to pick up. But we found we could really help them because we've seen tens of thousands of businesses now. We know what works, and so we use all of that data to actually help build a playbook for these companies. And we pair them with a coach, and so it's almost like our version of a combinator or an accelerator program, where we'll make a recommendation. We'll give them their OKRs and sort of their to-do lists, and we'll make an investment. And we'll basically say, look, we'll invest $25,000. We'll get 2% of revenue for 4 years, and we'll, ideally take you from, $1,000 or $2,000 in sales to millions of dollars in sales over those 4 years.
Yeah. If I'm a startup, at what stage should I be thinking about Clearco?
Yeah. As early as, I think as early as just when you're starting. We have some pre-revenue companies. Most of our companies make $1,000, $2,000 a month in sales, and we can start people. And then we've got our largest companies will make 400 or 500 million. So companies that are all the way up to pre-IPO, we can continue to support through that growth.
Since I don't have a Shopify store yet, I tried to register for Clearco. It didn't work. Let's say if I got accepted from Clearco, from my understanding, I will have an account executive partner with me. What's going to happen next? Will I be offered a tailored growth map for my business, or will I be offered some general trends and enroll in a program with a bunch of other people? Since every business is different from each other, will there actually be a growth map that will for sure work for me?
Yeah, no. So what we try and do is build a personalized sort of playbook for each business. So we look at your data and your stats benchmarked against every other company that, is in the same category or stage. And then we can start to say, okay, here's, you've got to improve your conversion rate, and here's a piece of software, or here's an agency that can help you with that, or you've got to improve your gross margins. Here's, a supplier that you should talk to, or somebody who can help you negotiate with your supplier to improve your pricing on your goods. So it's very, very personalized to the business, and so we have a personalized coach that will help the founders navigate their journey.
I saw that you guys partner with Hawk Media and Big Commerce on Clearco's page. How do you structure those kind of business partnerships? How does each party benefit besides the client sharing part?
Yeah, so those are all different, but yeah, I mean, for Big Commerce, we can provide capital for their customers to grow on the Big Commerce platform. Mm-hmm. For agencies like Hawk, there's two areas. So one, many of those partners will use, they've got clients that need access to extra budget, and so we can help unlock that budget. And then we also have, again, thousands of businesses that are always looking for help. And if we find a business, this is one of the nice things about using the data, we know what Hawk is very good at, and we know, where they can add value, and which metrics they can move. And so we can say, oh, look, you need to move X, this metrics from X to Y. You should talk to Hawk because they've done that for other businesses that look like yours.
Since Clearco can educate the market, I feel like it kind of gives people a way to manufacture success. In the past, people are building companies based on marketing and creating a brand. Now you can decide what to sell purely based on data. How predictable is it?
Yeah, I would say, most of it is just information asymmetry, right? There's a set of guidelines. There's a playbook on how to build these businesses successfully. There's certainly been, there's been this attitude of there's been a ton of content out there, but none of that content is personalized to your business. And so what we're trying to do is take all of the content that's out there, and I'd help you identify what should you do next for your business at this moment in time. And the only way we can do that is through the data that we provide there. And so I do think that you can build a bit of a playbook. Every business is different, but every business can have its own playbook that can use, every other business that's gone before it as input into that playbook.
Yeah. If you're, say, one of the Clearbank user, what would be a good business to start now?
I'm getting into cooking and baking. And so I might do a healthy, healthy snacks business and try and figure that out. I got to figure out industrial kitchens and co-packing and things like that. That's not really my strength, but I like the recipes, and I like try to figure out how to make these things. So that might be my next side hustle is starting a healthy snack company.
Yeah. Curious, if let's say you and I are starting a healthy cookie company, what would be your mental map for this company to succeed? So what would be your next, 3 steps to launch the business?
Yeah. I think the first step is just, figure out demand, understand sort of where there's a unique gap in the market, and can we create demand? Can we tap into the demand that's emerging? Then understand sort of product and margin profile and business model. Can we build a product that meets the demand at a price point that they want to, and finds the customer? I think a lot of people look at it as all right, what's my gross margin, and then what's my cost of acquisition? And sort of, the one nice thing about a consumable product is you can actually build an LTV of a customer, and so you can build in subscriptions and LTV. But I would probably start to think about it in that way, and then just start to test it. It's not that. I think a lot of people think they've got to have everything perfect, and they've got to have all the marketing and packaging and logistics and everything. And it's just about just get it out the door, get your product in the hands of the customers, get their feedback very quickly, and go from there. So that's been, that would be my first steps is like start, test it a little bit, but then like test the marketing a bit, but really, get in the kitchen, start baking and put stuff out in the world. Yeah.
Yeah. So for example, after we came up with a product, and then when you test the product, would you go to like a farmer's market to like actually getting people to try it? How would you go about that? At what point do I reach out to Clearco for funding or Clear Angel for advice?
Yeah, you could. I mean, look, you could certainly start with like farmers market and things like that for sure. Sooner rather than later, I would try and advertise. Like I try and put up even a landing page and find people who want to try it because that will help you identify if you can find customers at scale. So I would almost, I'd almost start there. Run some ads, trying to figure out if people will sign up for this, even a free sample, and then agree. If they'd agree to give you feedback. So I'd start to build a list of customers pretty early.
When it comes to building a list of customers, you obviously done a great job attracting customers for Clearco. Did you also run an advertising experiment for Clearco and double down on the pattern? How did you figure out who is your target user?
Yeah, we do some advertising. We have a lot of partners. So we work with a lot of agencies. We work with a lot of VCs, many VCs, get lots of pitches that they know they're not going to invest in. So they send us a lot of people. And then, we have our own outbound team. So we identify companies that we want to invest in, and our team reaches out to them as well.
For the outbound team reaching out to the potential users, I've heard users spoke highly of them. What's the metrics you use to decide who you should be approaching? And how do you acquire those data to make the decisions?
Yeah, I mean, we look at a bunch of different data sources. We identify sort of the companies that are going well. We kind of read about them. We find lists and things like that. But we can sort of identify through a bunch of characteristics who would be a good fit. Who's advertising on the channels that we partner with and things. And then, that's basically how we've identified those companies.
Looking back of all your experiences, you've worked in different sectors like recruiting, education, and now fintech. What have you learned in the past experiences you think helps you with running your business today?
Yeah, I think certainly sales. I learned very early, how much you could do in a day when you don't have anything else going on. I was telling the story. When I first moved to the US, so I grew up in Canada and was used to the Canadian sort of healthcare system. When I first moved to the US, I was playing soccer. I tore my ACL and I had to go in for surgery. And so I was going to have to take a couple of weeks off. And I was the only person doing sales for Top Prospect. And my CEO was like, you can't, we've got a target to make. You're the only person selling. If you can't sell, like, we'll have to find somebody who can. And my healthcare was tied to my employment. My visa was tied to my employment. So I was like, no, I got it. And so I came out of surgery. I basically like put my foot up on an air mattress and just like started cold calling for 18 hours a day. And, you can actually like, you can make a lot of progress, if you're very, dedicated and you do good research on sales and you have a compelling product to sell. But I feel like that's been, whether that's fundraising, whether it's partnerships, whether it's recruiting, or whether it's trying to sell customers. I mean, the ability to sell a product that you believe in is pretty critical for the success of any entrepreneur.
As a founder, when you started your company, I think you have to focus on sales, product, BD, like everything at once, basically. How do you dedicate your time? Do you create the product first, or do you see if there's a demand for the market first? Like how do you really put a company together, which is super impressive, obviously?
Yeah, I think it starts with talking to customers, right? And so I guess you can call it sales. I guess you can call it customer discovery. But, I think the skill is sort of like pitching a product that doesn't exist, but you could build. And so you pretend like it exists. And then once a customer wants it, you scramble to put something together that meets their needs. And then if more and more customers want it, then you're onto something, and you sort of then invest in productizing and scaling it. So it is, it's not exactly like research and like interviewing customers about their needs. It's more coming up with a pitch and a hypothesis, pitching it to a customer and then seeing if they bite. And so, I think there's certainly some sales component to it, but it's also, you've got to have enough of a sort of technical or product mind to know that you know what's possible in what period of time and what you could fake and what you could build and things. And so that's been, that's sort of where we started. And that's still how we develop new products. That's still the sort of motion of developing new products here.
One thing about your entrepreneurial journey that's really impressive is you have the courage to go after a big problem. When I think about the fintech sector, it's such a complex system with many traditional rules and players. In my mind, by default, I just ignore those kind of huge ideas. How do you have the confidence to tell yourself this is going to be challenging, but I'm going to build it?
Yeah, good question. I mean, I think, to be honest, if I had known how complex finance and capital markets and regulation were, I might not have started Clearco the way that we did. I think a lot of it was naivety, right? It was the idea that this should exist, and the idea that I think a lot of innovation comes from people who are outside of the system because you have that naivety around how the system works. But it was very complex. And, fortunately, we surrounded ourselves with very good advisors and early employees who understood the system and how to navigate it. And we were able to make it work. But you're right. I mean, working in anything like, finance or healthcare is a complicated beast, and you've got to get it right. And you can't really take shortcuts on certain things. And so, I think what's important is sort of disaggregating what are the sort of like laws and regulations and sort of structural things about an industry that you can't change, and what are the things that are just, we do them because we've been doing them for 100 years, but there's no real reason for it. And what are those questions that, assumptions you can question? And that's sort of what we ended up doing, was just questioning all of the assumptions and then very quickly understanding, okay, here are the things that we're not going to be able to change. Here are the things that we can change. Let's focus on the things we can change.
Yeah. How do you figure out what are something you cannot change? Because as you mentioned, sometimes people have been doing this for no reason. How do you identify something that could be adjusted?
So, yeah, we were able to, the things that you can't change are like laws and regulations, right? Or you can, but over a very long period of time. And so we had very, very good legal advice early on, like, hey, here's what worked. And I talked to a lot of advisors and friends and other founders in the space. The things that are harder, the things that are difficult to change but not impossible are things like how money moves, how investors think, right? How capital markets work. And so that's where we said, okay, well, if we really believe in this, we can put our own money behind it. We can put our equity dollars behind it, prove it out. That was where we were able to take some more risk, but we knew that if we were right, we'd be able to sort of change the way that capital markets worked and generate, create new asset classes for people to invest in. And so that was where it came down to conviction. And our early investors saw the conviction that we had, and we were able to convince them. And then, it took a while. Many people didn't see it, but the ones that did got rewarded really well. And then, from there we were able to build on that momentum.
Going back to building a company, after you recognizing the problem, how did you figure out the business model? As a founder, of course, I would love to take non-dilutive capital, but providing these kind of capital, making the solution is not easy. At what point did you figure out this will be a sustainable business model for your company?
Sustainable business model, like, I guess, a big part of it was just like understanding sort of what we could charge, what was reasonable, where was the risk in the business, and how do we actually, how do the economics of the business work? I think with financial services, there are complex business models. There's complex costs. There's complex revenue streams. And so it took me a while to sort of wrap our head around it. I still think our business model is evolving for sure. But yeah, it's really about like, where do you create value? What are people willing to pay for? And how do you actually, and what are the costs to run your business? And can you cover those costs and create enough margin to invest in growth, while charging people for things that they feel like they're getting value out of. I think, the maybe the simplest way to put it is, if your customers feel like they're getting significantly more value than you need to charge to make your business work, then you've got a good business model. If your customers perceive the value that they're getting as less than what they're paying you, then your business model will eventually erode. Or if your cost to run your business at scale is higher than what you're able to charge, your business will eventually, run out of capital. So it starts with sort of customer value, and then it comes down to pricing and costs.
Yeah. Speaking of like the pricing and cost, from my understanding is like you would figure out which kind of company to, I guess, like loan the money to. And then you guys would take a percentage of how much you loan them, right? So it's between like 6 to 12%, I believe. Depends on like what the person is going to spend the money on. So if they're spending on Google or Facebook ads, which is like more predictable kind of spending, you guys will take a smaller amount from them. But something with bigger risk, you will probably take a more like higher percentage. I feel like that's a really clever business model. At what scale do you think you guys can, because you guys are also running a really huge company. How many employees you guys have?
Yeah, we're 320 now. Yeah.
Right. So that's a really big team, right? Like at what point did you figure like this can, I guess, like the company is like profitable? Like at what scale, I guess?
Yeah. I mean, I think it's, we were fortunate enough to have, like Michelle's background has always been a bootstrap founder. And so she's always kept us very, very capital efficient. So we were fortunate enough to have control over our cash flow from the very beginning. And like we don't need to be profitable, but we need to know that we can be whenever we want to. And so we've always had the opportunity to raise capital on favorable terms because we knew the next product that we wanted to invest in, the next piece of R&D, and the next investment we wanted to make. But on a unit economics basis, we've always been very responsible because we're efficient in finding customers, keeping those customers happy, and keeping them with us. And so we've always been we didn't have to get to like massive scale for the unit economics to work.
Yeah. Speaking of the founding team of Clearco, you guys have multiple founders, 5 co-founders, right? So
5. We added some people. We added a couple of people through the over the years that joined us for the first couple of years of the company, but we're sort of instrumental in the business. Yeah.
What is it like working with 5 co-founders, and how do you guys figure out what kind of complementary skill sets you guys need to make the company successful?
Yeah, I mean, I think it was just, different personalities, different backgrounds, people with different, complementary skills, and that we worked, incredibly well together. Right. And, but frankly, it was, a lot of it was people that were willing to take a bet on us early, and risk their career because this wasn't a sure thing. And so we've had people that have joined throughout the course of the company who have really been sort of instrumental in changing the trajectory and the face of the business, and embody sort of the values that we really care about, and are great role models for the team. And they've joined us as founders even after the first day of the company.
I'm sure you guys backed solopreneurs. What's your opinion on if someone should have a co-founder or not? If you are starting another company today without much work experience to help you meet a co-founder, how would you find a co-founder?
Yeah, it's usually people that you have a deep, history and relationship with, because it is a long-standing, you're working closely with this person for a very long time. So it is tough to just sort of meet somebody and start a business together if you hadn't worked together in the past. It's not impossible. I've certainly seen it happen, but I think for the most part, you're going to have disagreements. You're going to have ups and downs in the business, and if the co-founder relationship isn't strong enough to withstand those, then that's often when companies sort of fall apart. And so it's got to be somebody that you can trust, somebody you work well with, and that you've got each other's back when it comes down to it.
Yeah, you are working with your partner in real life, right? Like, how is working with your significant others together? Like, what's the dynamic like? And then what do you think are your advice for people who are like trying to start a business with their family members or people that are really, really close to?
Yeah, I mean, it has a lot of benefits, but it is certainly also very difficult, right? I think some of the benefits are that you're on the same schedule, you take vacations at the same time, which kind of like means that like you can actually unplug. But when things are intense, you don't feel bad about working, all hours because you're in it together. You also get to see your partner really like the whole 360-degree view of them. So you see their strengths and weaknesses, but you see them as a complete person. I think a lot of us are in some ways more ourselves at work than we are at home. And so you get to see both sides of that. I would say, the downsides are certainly that it's very hard to unplug. It's hard to have a lot of balance. People talk about like, can you have dinner and not talk about, work? It's kind of like asking parents to have dinner and not talk about their kids, right? Like, in some ways that ends up being a lot of what you have in common. And so, you have to actively schedule time apart, schedule time with other friends and family that are outside of the business, so that you don't just completely cut off and lose those relationships, and that you have some space and some sanity, especially during COVID. Michelle and I had desks on opposite sides of the office when we were in the office, and so we would still sort of meet up at the end of the day and catch up. During COVID, we were sitting like 5 feet apart, and it was it got like in very, very intense. So we had to figure out ways for us to work separately and like still have some sanity. So I can totally empathize that couples or family members that are working close together, it certainly puts a strain on the relationship. It can bring you much closer together, but not without some added intensity.
Yeah, I can totally imagine. But like, I think it's great that you guys can figure out a way to both work and live together. I'm really jealous of that relationship. I'm curious, like, what do you think were maybe like 3 decisions that you made in your career that you're really proud of?
Yeah, I would say, I don't know. I don't know if there were any that I'm like, really, really proud of decisions that I made, but a lot of it was just seeing opportunity and going with things that I, may not have been rational decisions, like, going out to San Francisco and instead of joining Facebook, joining this startup company. I think it might have been more lucrative to join Facebook pre-IPO, but I think I might have still been there 10 years later. And so, I think finding the opportunity that really spoke to me, and I'd say every time I made a career move, it was because I would wake up in the middle of the night thinking about this new opportunity, and I'd write down pages and pages of ideas. Wow. And that's sort of how I knew, like, okay, if I'm this excited about the company, before joining, I think I can come in and actually have an impact. And so that was sort of the signal for me to know that this was, those were the right moves. And so whether that was moving out to San Francisco, whether that was moving back, whether that was starting Clearco, all those moments were times where I kind of was obsessed with working on the problem in front of me.
Yeah, I mean, like, why didn't you join Facebook back then? Like, was it because of it's a more matured company? You think it's like less challenging, or?
Yeah, it was just about impact, right? If I was the 1,000th employee at Facebook, I was like, how much of an impact can I really have here? Compared to being the 5th employee at this new startup that I was, solely responsible for the revenue of the business. So yeah, that's probably why I made that call.
Yeah, I also saw that you joined Top Hat and then you scaled the company from like 15 to 80 people. I assume that's like also such a great opportunity for you to experience like how to actually grow a company, which is really cool. So I really think you made a good choice to like adapt the skills that you need to like build ClearBank today. Like, so like there's 1 minute fire out for you. What's your favorite book?
I love Reed Hastings' No Rules Rules. Just read that one. It was really, really inspiring.
Yeah. Who made the biggest impact in your career?
There were many people. It might have been Michelle, might have been Chamath, but yeah, a few people in my career that bet on me when I wasn't really that confident in myself.
Who would you invite to your dinner party?
Dinner party. I've met Richard Branson. I think he's a great, he's a great storyteller. He's an awesome person to have around. Big fan of him.
Where can we find you outside of work?
I mean, pre-COVID, I loved playing basketball. So I was on the basketball court quite a bit. Even actually during COVID, I would just go and shoot around quite a bit. So yeah, that was my outlet.
Yeah, I love basketball. Thank you so much, Andrew. Thank you so much for coming onto the show today.
Thank you, Grace. And I had a lot of fun. Appreciate you having me on.
All right. That's all we have for today. Thank you so much for listening to this episode of Smart Venture Podcast. If you like it, please leave us a quick review and hit subscribe so you don't miss any tips from the experts. If you want to receive our updates, please leave your email at smartventurepod.com. If you want to connect with me, all my socials are at Grace Gong GG. Besides LinkedIn, it's just Grace Gong. I'd love to connect with you and let me know your thought about the show. Now you can also listen to Smart Venture Podcast on YouTube. Go to smartventurepod.com, click the YouTube link on the top banner. Don't forget to hit subscribe and smash the like button.